Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, September the 30th. The year's 2024. Let's talk trading. It's time for the weekly open and gap and monthly wrap up. These videos are for educational purposes only. Your results may differ from mine. And on the last trading day of the month, I just want to remind you, risk management. Never lose more than you're willing to lose on any one single trade, or you might blow up your account. So, monthly wrap up. We are about 62 pips off the monthly high and 370 off the monthly low, but we are 245 pips above the monthly open. So, big green month. As you can see, we broke out of the previous month's high. And let's see, where did I miss out on? Okay, for the week, all the gaps have filled. We are just 4.7 pips above the weekly open, 51 off the high, 22 off of that low. And I've already talked about the month, but you can see here once again, clearly above that previous month's high, which happens to also be, looks like, about the future pivot point. And looking at the day, we're just 3 pips above the daily open, 52 off the high, 21 off the low. And you can see Friday was an inside bar. We actually broke through that low. For the year, 661 pips above the yearly open, 62 off the high, and 1,073 off the low. And I'm wondering if this last quarter, if they're going to pull back or if they're going to extend it. I mentioned that inside bar on the daily from Friday. And you can see there's some inside bar action. As far as the range go, the yen pairs seem to be leading the charge again. Lots of pips. And as you can see, this hour we bounced off that weekly open. And the previous 2 hours both exceeded or the weekly open at a downside, but then we closed above it. And remember, today is the weekly open. Looks like the red rats and the green rats both feasted today. 72 pip range on the day. Bambino flex indicator said to go long. Bias near the pivot was short. Well, it seems like it got there a few times and the shorts paid off. You may have experienced some pain if you traded the previous H4. If you went short at the pivot. Or you may have gotten a lot, and bias near R1 is short. You can see that paid off. We took out the daily pivot. We took out the weekly so far this week, and we've taken out the monthly. So one missed pivot for September. Don't know if we'll take that out this year or not. The wick zone of the previous day, you can see in and out of that upper wick zone, never penetrated through the high. We came here, we broke through the low a couple of times. Hopefully you didn't get burned in this one, because it came in, it looks like it might have exited, but if you would have taken that short, I mean, right there it's telling you to go long. And if you would have just reversed, you would have more than made up those pips. Yes, you could call that hairy hindsight, but you know, we watch this every day, so it's not like we haven't seen this happen before. So if we look at the week, which is just starting, you can see once again 73 pip range. But since this is also the monthly wrap up, if we switch to the month, 432 range for the month to 75 percentile. High minus previous high, 168. We didn't break out of the previous low. High minus the close for the rats, 60. Red rats, 372. Green rats. The monthly open crossover, 307 to the north and 125 to the south. So once again, trading some of these horizontal lines can be profitable, but it's up to you, the trader, to make that happen. It's not just the system. In fact, one of my trading buddies or people that I correspond with, I guess he either wasn't too lucky or didn't have his stops in place, but he's experiencing some difficulties with his account. Not sure why. I advised him on a few things. I don't know if he took my advice or ignored it. I would assume ignored, because the devastation that's happened to his account. And it looks like things have slowed down as we're about to wrap up this trading day. So you can see here, but we had some nice ranges on these M30s. There was a couple of hours. We saw that in the hourly chart. Some nice bars to trade there. And trading off of the 3 balls and the lower high, higher lows. You can see we're getting ready to have one right here. Except I don't usually like trading reversals off of 2 balls. 2 balls have a tendency to expand, just like 3 balls. It's the 1 balls that I view as stop signs. Looking at the higher high, lower low wick zones, you can see we moved off of one right here. It came back to it, moved up. So the range looks like we're going to be stuck with the 432 for the month. We look at the accumulated. We did push it. It's up to 1135 for the year. So at this time of year, we are in the number 2 position because we had one at 1139. So we're below that. We're above 837. So we'll have to see if we can get out of this compression. And that's why I like to look at these statistics, because then you can see what price is doing numerically as opposed to just what you think or feel when you're trading. It's just good to have these hard numbers take a look at. And so for the long-term traders, year-to-date yearly open to the current close, You can see if you held on, you'd be up 5.2%, which in today's market might not be a bad idea. It's like, you know what, close that trade, take your 5% for the year, be happy. The thing is, some traders want more. They get a little lucky, and then all of a sudden things turn against them, and the next thing you know, they're looking at devastation. So you just have to take profits and take losses when your method tells you to. So let's take a quick look at the monthly here on the trade reminder. Buyers are in strong control above the upper wick zone of the previous month, way above the previous mid and the current pivot. Higher high, higher low. Up 95, almost 96 pips away to the EMA 5. Range percent of ATR. $248. So that's huge. Price in on the weekly. I'm looking at reading the weekly here. We've got a lower high, higher low, also known as inside bar on the week. So far this week, we're inside the upper wick zone. Looks like it tried to break out, but it didn't. So if anything, you might want to look for a price to move down, drop down to the daily. We already broke out of that inside bar, that shaded area here. Price between the wick zones. We exceeded the previous range by 5.3 pips. Sellers weak control right now. And you can see here, price is ranging. So you might want to play some bounces off of those areas. And if you put a horizontal line here, you can see those opens and closes kind of, and price isn't closing above that area. So looking left, you could see, yep, if it doesn't break it, it's going to reverse. And I spoke with a trader over the weekend that was asking about statistics, and so I'll probably do a video maybe tomorrow just going over all of the different statistics. And also he asked me a question. I thought that might be a really good video series. Gun to the head trading. In other words, if somebody put you in front of a computer, put a gun to your head and said, you have to make me 5 pips today, what would you do? How would you trade? What method? What instrument? It's kind of an interesting thought, because I guess if there's a gun to your head, you'd be hyper focused. But yeah, it's one of those things where sometimes people ask you a question and they're looking for an answer. But sometimes the answer, the truth of the matter is, it depends. Because if you were to put me in front of the screen right now and said, you have to trade, you have to make 5 pips, I'd ask, well, how long do I have to go by the end of the, by midnight tonight, current time zone? Oh, I'd sit on my hands and wait, because I wouldn't want to trade right now. But if I had to trade right now, he says, you've got, 30 minutes or 60 minutes to do it. It'd be a sweat. I'd probably maybe take 1 pip at a time. So, fellow traders, let me know if you want us to do that. gun to your head trading, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.